Morning everybody, it's Chris here from Serene Education with the 4 majors analysis update for the 8th of September 2011. Hi guys, just going to be going over the 4 majors. Let's start with the Euro. Nice juicy bounce yesterday on the institutional moving average, but as I mentioned, target was going to be 1400 overall. Why? Psychologically, just a huge support and resistance level, and sure enough, an on target bang. Nice juicy bounce. And this morning on Asian market trading, we've seen a slight pullback, ceiling level at the 1410. As I mentioned in a previous video, we are in this consolidation area now. What we want to do is see a kick higher to confirm that we're seeing another bounce. Failure to do so would see price just roll over. The CTC on a daily has gone red, but noticeably there's the 1400. It's got to break and close below 1400 to see any further downside movement. Until it does that, then we could primarily see a bounce occurring. So let's have a look. You'll notice on the weekly, if I pan out to a weekly, you'll see it a lot clearer. We have the institutional moving average at 1400, as well as the 50-period moving average at the exact area, and also the major trend line. So we have 3 areas of possible resistance or support for this pair. So it'll be interesting to see where at the end of this week it ends up, so we can see a possible movement. CTC is well extended higher on this pair. We are in a consolidation we are in a consolidation above the 1400. If it stays above 1400, prior resistance, as you can quite clearly see, then we could see ultimately that that breakout and continuation higher. Failure than that, and we see a break below 1400, would deem this is very, very negative, and we should see price just rolling over, and then we should be looking for our targets to the downside. So it'll be very interesting to see what happens in the next couple of days for the remainder of this week, to see if price can actually bounce higher. As of market trading this morning, Asian market trading, we've seen price revert slightly to the downside. The 4-hour is still, the 4-hour candle is still showing all bearish on the CTC strategy template. All the moving averages above us, and price action is trading slightly higher. As I mentioned, there's a bounce. You'll notice the 1400 is a support area, so please put that in, so you know where the intraday support area is. And you can see price action, Asian market has seen it pulling down. So 1410 is going to be our ceiling level, and 1400 is going to be our support level. We need to see price trading on either side of these. So for further upside movement bullishness, we need to see a close bullishly above 1400, or further bearishness to the downside, we want to see a close below 1400 bearish. Okay. Just looking at 30-minute charts for Euro, you'll notice that the institutional moving average now on 30 minutes is starting to come into play. We have had higher swings, so we're going into this consolidation squeeze pattern on the 30-minute chart. So are we going to see the institutional moving average, which has in the past 2 days acted as a resistance level, like a ceiling level, and pushed it lower? Are we going to see the same thing occur here when it gets to the 1410 sometime this morning? Are we going to see the same thing happen where it gets to this level here, fails to break higher, the institutional moving average actually comes around and just pushes it down? You can see that the actual institution moving average is starting to slow down now. We're starting to get this curve happening, and unlike before, we saw a definite sell-off motion. Here we're getting a curve. Price is playing around with the 2 moving averages. So psychologically, this is telling you that there's a definite slowdown in price action. We need to wait and bide our time for a definite buy or sell signal. So as I mentioned before, we need to see price either breaking higher than the 1400 and closing higher than 1410, which will take us above the institutional moving average. So a nice bullish up candle will definitely give us clear indication of further upside movement, and we could look at roughly the 1420-200 mark as a possible target, first target. Otherwise, we want to see price closing lower than 1400, as I mentioned. Can't keep stipulating. It's far better to bide your time, be patient, and wait for price action to do exactly that. Otherwise, you're just trading in this consolidation band. So we could, if you wanted to, look for a break of the prior swing. In this case, the one below here, roughly around the 1405. There we go. And then get in nice and early, and then trade it down to the 1400. Is there enough in the trade to take it in? You have to look at that in your money management rules, etc. like that, to see if it's a definite. Otherwise, rather bide your time, wait for a clear signal either way, and trade that. Next up is sterling. Here again, saw a bounce, a clear bounce. This time under the 1600. We needed to see price reverting on closing higher than 1600, because psychologically, as I mentioned on the euro, this is also a very strong support and resistance level in the past. You can see here. However, price has broken lower. Yesterday we saw price trading lower. We saw it pull back. However, as you notice, failing to close higher than 1600. So this is now ceiling. So breakout. Is it a pullback, a consolidation? Now if price fails to rally higher, and you can see price action now is trading at the low end of the wick, we should see price continue lower. So breakout, pullback, continuation. First port of call you could probably look at where price is trading right now is roughly around the 5900 mark. Ultimately, fails to do that, then we're going to see price really push off. And the big one to really see, the biggest consolidation here is this one roughly around at 3500, which is way off. So you could look for potential further downside movement. CTC's in our favor on the daily chart. So 1600, you put that in. There we go. You can see the consolidation and the failure to break higher. Okay, so we saw price breaking through that on the 6, through the 6, 7, and bits of the 8 resistance, and price has fallen lower. Notice that the wicks are the swings are still low, so price action is trading lower and getting a lot stronger through the last since the 5th. Swing lows are getting more drastic, and you can see price action now testing that low end of the trading range, as I mentioned. Ultimately, 5900 would be our first initial target if you wanted to. CTC is well extended to the downside. So if you look at the 30 minutes, here again, going into this indecision, consolidation, you start seeing the CTC being a lot choppier. So we want to see a clear break above below 1590-200 to see further extensions lower. Otherwise, what we could do is you could see price putting back. By this fake out here that we saw, you can see price action is now being squeezed between 2 points. So we need to see a clear decision from price. A break lower than 1590-200 would definitely give us further downside movement. A break above this downtrend here, ultimately above the 1602, which take us well above 1600. It'd have to be trading above 1600 in order to be bullish again. So if you're trading in here, you'll be trading a consolidation range. As you can see, has been consolidating on the underside of 1600. So we want to either see a break higher than 1600 to see a possible pullback occurring, and 1607 would possibly be a first time attempt. 1400 would be another one. But until such time as it's trading above 1600, long-term outlook for this pair is still very much bearish. We need to see break below 1592 to definitely give us an idea that we can see further extensions lower with momentum. Because psychologically, you're seeing support. We don't want to be getting to trade now only to be hit support again. So we want to be psychologically breaking below that to see further extensions lower. Next up is US dollar Swiss franc. After that huge up counter that we saw 2 days ago, we've seen price just going sideways. This move in the market really caught a lot of people off guard. And what it's done now is it's pretty much taken us up to areas where we had price support and resistance in the past. Noticeably one here where it is now. You can see price is failing to break lower than it. So roughly around the 85.50 mark, we've seen price find a lot of support and resistance level in the past, and sure enough, what we've seen price is get above that, and now it's finding support. As long as it can stay above that area, as long as it can stay above there, then what we could be seeing is a slight pullback before we see another continuation, a kick higher. And the kick higher would take us back to prior resistance and support, roughly around the next one, which is here just above the institution moving average at the 89.50 mark. The institutional average might come into play, but you can see that since June of last year, price has really been in a negative downtrend. And notice if we just recently even further stronger. So we can see that the major trend has been breached for the first time in a year. And so what we want to see now is price kick on above that. So the beauty of what it's done now, if you look at the fib projection, so we take the starts, the high, and the pullback. The 100% is not too far off, as I mentioned. So we're not that far off from where price needs to be trading, roughly around the 88. Thereabouts, we're going to start getting consolidation because the institutional moving up will come in. And psychologically, that will play a part with the big boys out there. Notice on the weekly chart, huge hammer. And then we've seen price kind of pulling up to the upside. You can see that there's a definite consolidation band in that area, and we're trading above it. So it needs to stay above that area going into next week. If we can stay above that, then obviously we could find a bit of a support above here, and then we could see another attempt at the 0.900 mark to give us further indication. So we have on a weekly the first start of our CTC strategy, but there's still a long way to go for this pair. We still need, if price can stay above the 85.50 to start with, then we could see a further kick to the upside on this pair. So let's have a look at the intraday. So we know that 85.50 intraday is going to be our area. So as long as price trades above that, then there's a good likelihood of a further upside move. Notice the 50-period moving average now swinging up to join the 20 period, and I think if we do see that, then what we could see is a potential bounce higher. Slight sell-off over the past couple of days. But also notice that the lows are getting higher, so we're getting into the squeeze pattern here. There we go. Something's got to we've got to see price moving somewhat in the near future. But as long as it stays above the 85.50 mark, then ultimately we could see further extensions higher. Last pair of the day is US dollar against the Japanese yen. Here again, we saw a break with the Swiss franc when the government pegged its currency at 1.20. We saw price really across the globe really rallying, even the futures, shares, markets, not only in the forex. But that yesterday we saw price pulling back quite noticeably. I was hoping as long as it stayed above $77, then we're great, and it's still doing that primarily because the 77 area is and the 65 are pretty much a consolidation zone. You can see how there are a lot of wicks and support. So 7700 is a clear consolidation ceiling level, and the 60 we all know that the 7650 is also a clear support area. So price needs to break either side, and we had that. So now if price could still stay above that area, then what we do is we could see a continuation. So breakout, consolidation, continuation. That's how breakouts tend to happen, whether it's the downside, same over here, breakout, consolidation, continuation. See that? And that's how it happens in most breakouts. So if price can stay above these areas going into next week, then 77 we could definitely see a push higher. Notice that we haven't had any lower swings. So on a daily, CTC has gone. Two of our criteria for the CTC strategy have happened. We just need I think if we get above the $78 the 78 mark, then we're going to see price really rallying to the upside. Intraday, you could see all that indecision that we've seen for most parts of August. And as I mentioned, you can actually box this. You can clearly see that price has been moving in this range here, just consolidating. And sure enough, the institutional moving average, the 200, acted as a clear ceiling level. We've now seen price break above it, and now consolidating and staying above that area. As I mentioned, it needs to stay above that above the institutional moving average. CTC is blue now. We're having higher swings, so we can see price is now to the upside So as long as it can stay on that side of the trend line, the possible trend line, then what we should be doing is looking for further bounces higher. Ideally, if we can get above the prior ceiling level here at 77.70, then we are in clear air, and we should be looking for further indications of upside movement for the remainder of this month. We have the same happening on the hourly chart. Higher swing, higher swing. So we have higher swings moving higher since the breakout. It hasn't broken above the yesterday's high, so you can see clearly a resistance level there. Failure to do so could see price falling over, so we need to see price breaking and closing higher than the 77.40 with a nice bullish up candle. If we get that, because we're now trading on this possible trend line, so if we get that there, then we could see price really reverting higher. A lot of wicks, so there's clear indication of ceiling level there at the current level, so need to be trading above that area. Failure to do that would see price just falling over, and then we could see the bottom part of the 77 back to the resistance level at the 7700 mark as our potential first target. So there again, we have two setups. We're in a squeeze pattern consolidating. Okay, the CTC is giving us mixed feelings. We know that on our 30 hourly and 4 hour we're getting upside movement. However, there's clear indication of resistance level on our smaller time frames. And you can see that this is an hourly chart. You can see that getting clear, there's definite resistance here. Otherwise, we'll see breakouts. We've said 1, 2, for the past 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. The past 12, 14 hours, we've had resistance at this level. If we don't get to see a breakout soon, I feel that we're going to just see price just give up and fall over. We do need to see a break higher. If we do get that in the next hour or so, then great. Then we could look at, as I mentioned, the high ends of the wicks here at 77.70 as our next potential target intraday. Failure to do that, then we could see price just consolidating and falling back over to the downside. That's it, guys. Hope you have a fantastic trading day today. Please be aware of any news. There's a lot of news out today on sterling, Canadian, and then a lot of US data coming out this afternoon. So be aware of it, especially news that could potentially affect the yen and the Swiss franc. We've got unemployment claims, trade balance figures. This is for the US Fed. Mr. Bernanke talking at 6:30 p.m. GMT tonight. So that all needs to be taken into effect. And then we have CAD early this afternoon at 1:30 p.m. GMT. But this morning we have a lot of news for sterling in particular, asset purchases. We have the official bank rate at 0.5%. Are they going to change it? I doubt it. If they had to, then that could also be quite interesting. We also have the MPC rate statement. So wouldn't be trading sterling just for the time being. We also have the minimum bid rates. We've got to see if the European Union actually stays with this 1.50%. That's or do they raise it or lower it? But I doubt we'll see a change there either. But yeah, a lot of news out today, guys. It could factor in price action. So be aware of it. Factor it into your trading, and just be aware of it. Yeah, it's very, very important. You don't be trading against market direction trends. So that's it. Have a fantastic trading day. Keep it simple. Use the CTC correctly and back it up with sound money management rules. And most importantly, trade serenely.